Good. There you go. All right. So welcome to our part two of our two-part seminar, How to Purchase Your First Investment Property. Jamil, part one was uploaded on YouTube. When we share the link for part two, that's probably going to be either tomorrow or Friday. We'll then share both links early next week. But if you follow the link to part two, you can find part one, or you can just go to our YouTube channel. Carmelo, also, if you want to maybe share our socials and the Calendly link, if anybody wants to book a call with us.
I'm doing that.
And you're welcome, Jamil. If anybody wants to book a call with us and have a kind of a private discussion on anything that we covered or maybe didn't cover in this presentation, happy to do so and share our knowledge. So part one was a lot of theory. Part two is actually more the practical. So what we're going to be sharing with you, we're going to give you a little bit of an overview, but then we're also going to be sharing some practical examples on things that we have done ourselves as real estate investors, so that you can see what the opportunities and possibilities are. So just a little legal disclaimer to get us started here. So we're not tax nor investment experts. Basically, do your own due diligence. So don't take this as any legal financial advice. Everybody has their own comfort level when it comes to their investment decisions. So make sure that you're seeking the right type of third-party expert advice where it's necessary, and you are only getting into investment opportunities which you are comfortable with and make sense for you. Carmelo, why don't you tell us a little bit about yourself?
Hey everyone, my name is Carmelo Boutis. I'm a mortgage agent at yourmortgageyourway.ca. I've been doing mortgages for over 20 years. So I actually began my career as a mortgage underwriter for one of the banks. If you don't know, mortgage underwriters, their job is they're the ones who actually review and look at the applications when you apply for a mortgage and make the decision whether you're going to get the approval or not. So the first thing I learned, which was the most valuable thing, is how the banks think and what they look for to approve anyone to get any financing. Now I'm an independent mortgage agent. I don't have any loyalty to any bank. I have access to over 59 different lenders. And I've worked for, the big banks, smaller alternative lenders, but now I'm independent. Nice. You can find me at Carmelo Mortgage on Instagram.
Nice. And if anybody wants to learn more about mortgages, Carmelo is doing a really good webinar in 2 weeks. I don't know if you want to
so in 2 weeks, really 2 weeks from now, I actually have the next two presentations. 2 weeks from now, I'll be doing a presentation with regards to how to make your mortgage tax deductible. And the following 2 weeks, so a month from now, I'm doing a presentation with regards to how to pay off your mortgage faster and save a lot of interest.
Very good information, tons of value. Thanks, Carmelo, for that overview and for putting these presentations together. I always learn a lot. I gotta say, since I started to work and be friends with you, my mortgage knowledge has I don't know how many times it's increased. So no worries. So a little bit about myself. My name is Alex Winiecki. I'm a realtor of Remax Condos Plus out of downtown Toronto. I work in the Greater Toronto area. I spent over a decade in Toronto's condominium industry prior to getting into real estate. I've participated in conducting over 65 condominium assessments during that time. I've probably been in every condo in downtown Toronto, whether it was to quote on services, meet with a property manager. We provided services there, do an assessment, do a walk around, give security recommendations. I've also been a real estate investor since 2013. And I have properties in Ontario and Alberta, and I do have another webinar I'm going to be doing in a month, which is going to be talking about my experience investing in Alberta real estate and a little bit about the opportunities that exist there now. I do work with a team that sells pre-construction projects out there as well. And last year, in 2022, I was in the top 1% for realtors. Sorry, I was in the top 1% in GTA condo sales. From over 70,000 Toronto Regional Real Estate Board realtors. And if you want to connect on Instagram, it's at alexz.realtor. a lot of investor, condo focused, first time buyer type of information. And yeah, so, let's talk a little bit about why we decided to put this presentation on and why would anybody even want to invest in real estate. So, first and foremost, real estate, unlike, a commodity like, gold or a stock, is a basic human need. So we need three things. We need food, water, and we need shelter. So it's always going to be in demand, especially in Canada. We're booming. We have a booming immigration. We're expecting about 1.5 million new immigrants over the next 2 years. They're going to be settling in pretty much 3 or 4 markets: Vancouver, Calgary, Montreal, and Toronto. Most are going to be ending up here in the Golden Horseshoe area. These people are going to need places to live. A lot of the new immigrants that are coming over are also high skilled, and they are coming into high paying, very industry specific jobs. So they make great tenants. But unfortunately, it's very challenging for them to find housing, and for anybody to find housing, and that is because just supply and demand doesn't match up. So if somebody has an opportunity to actually purchase an investment property, it's something that's going to go up in value, and it's also going to help them to accumulate wealth and provide them with something that they can also leave for their families or for their children or their loved ones. It's not going to be going anywhere. It's also a pretty low risk investment, especially if you understand what you're going into beforehand. And that's, again, why we're doing this presentation. So yeah, how do you make money in real estate, Carmelo?
Well, it's easy. Making money in real estate is just buying and owning when you really think of it. Because once you buy the property, over time, the value will just naturally appreciate.
Right.
There's real estate's the one thing where you can look back at any 10-year period. Everyone who bought at the peak at any 10-year period looked out 10 years afterwards, wished they bought 2 properties. That's how it is. And over time, when you own real estate, especially if you're buying an investment property, you make your mortgage payments. A portion of that payment goes towards your principal, the money you borrow to purchase that property, and your balance goes down. So when you're owning investment properties, you're having someone else pay that mortgage. And at times, if you're looking at the right investments, you're looking at properties with positive cash flow, you could get a surplus and you can actually get extra money for yourself. Right? There's 2 different types of investments out there, Alex. It's those that really that get higher cash flow, and then those that appreciate more.
Yeah, and I like that you talked about this, and Sandeep will answer questions at the end. So if you could just park that one, or we'll make a note to kind of answer that question, because we may answer some of these questions as we go along. I know that your question will be answered, but yeah, you have to look at it historically, because for myself, like, we as humans, we only know the reality and what's happening now. So when I've purchased properties, I've had situations where I was like, this property costs, this much more than it did 2 or 3 years ago, and I'm going to be buying it. So like, it feels like you're buying at the top of the market, but then when you look back at it 5 or 10 years from now, like you said, you wish you bought 2 or 3 or 4, right? Like, I wish I bought a bunch of condos like in 2004.
I just wish I bought anything. It did cash flow positive, cash flow negative, anything, right? That's the one thing. That's the one thing with real estate. Like, again, we have so much immigration, and doesn't matter when you buy. It's always, there's a saying. It's, what is it, Alex? It's time in the market, not timing the market.
You can't time the market, because by the time that whether the market's, for example, like, it naturally goes up, like we kind of show in this next slide here, right? So the GTA housing market overview for the last about 2 years, you can see that it goes up and down. There's swings, but then when you actually look at it over 30 years, you can see that historically prices are going up. So as much as there may be little swings like this, and somebody that's buying here in January 2022 may think that buying here, let's say at what is this, January, February, March 2022, it may feel like they're buying at the top. When you actually look at it historically, and we've had jumps like this in the past, like here in 2016, 2017, you have to look at it as 5, 10, 20-year investment, and it's a little bit challenging, but it's not, for the most part, kind of like a buy to flip type of situation, because there's transaction fees that come with selling real estate, land transfer tax, and unless you are in the renovation business and you're able to buy a property that's in distress, significantly under market value from maybe like, I don't know, a hoarder or something like that, you're probably not going to be able to do this. Like, there are people that go after wholesale real estate, and that's kind of the clients that they target, the ones that just like, they want to get rid of their property, but they just can't, clean it out or bring it to standard. Like, most transactions happen on the MLS and they happen in the market. So anyway, so this is, TREB over the last 30 years. You can see ups and downs, but really, historically, any of these points, you would be better off today than you were then, except for maybe the peak here in March of 2022. But this will recover, and it's already started to recover. This is just when the government was giving out free money when COVID started, and this was like the epitome of FOMO, fear of missing out, where just people were just throwing money at properties.
Maybe, Alex, but again, I think this is where real estate's a long-term perspective. The same thing happened in 2017, and you can see that quick bubble and that quick spike up.
Exactly.
Where then they introduced a stress test, and everybody's thinking, oh my God, all my mortgage brokers thinking, oh my God, nobody can get approved for a mortgage anymore. What am I going to do for work? How am I going to help people? And all those people, and I have had people who bought at that peak period, and I'm still talking to them today, and they still wish they bought two properties at the peak. Right. Ironically, right? So even the peak that we just went through, when we go another 8 years from now, we're going to look back and say, damn, I wish I bought two.
Right, exactly. That's what it is. So I'm going to talk a little bit about my example. So this is a little townhouse project in Barrie. I got one of these units. I purchased it back in 2014. I got it from the builder. This was $279,000, $280,000, and at that time, I was thinking, oh my God, a townhouse in Barrie for $280,000, that is so expensive. I don't know, is that something I should be going with? But it kind of made sense, so I moved forward with this purchase. This property appreciated pretty significantly. I was able to actually take money out of this property through a second mortgage, and then I was able to use that equity towards purchasing another property. So I'm going to kind of like break down how I did it, and it's just let me know if there's any questions about this. So the property that I bought for $279,000, today's market value for that property is about $650,000. And there were times like, back here where these properties were selling for $800,000 as well. So basically what I did is I bought that property. I put $56,000 down because it was from the developer. So I needed to do a 20% deposit on that property. I was able to refinance that property, get a second mortgage on it, and then use $80,000 as a down payment towards purchasing another property. So essentially what I did is, with $56,000 over the course of 7 years, I was able to purchase two properties, and I have now created for myself $450,000 in equity. And that's really the true power of real estate, because you're leveraging. You're not taking $56,000, putting it in the stock market and letting it appreciate. You're using $56,000 as 20% towards a larger amount, and what's appreciating is the larger amount.
Let me ask Alex. Again, okay, you bought this first property in 2014 for $56,000. Your own money, your own savings.
Yes.
Afterwards, to buy that second property, you didn't use any of your savings. Whatever you worked for, whatever you put aside for savings was all yours. You just took the equity out of this property.
Exactly. So when the value went up in 2021, I don't know, it was worth about, like when I did that mortgage, it was just before, before the peak here. So it was like somewhere here. So I think the property appraised at like, $550,000 or $6,000 or whatever. So I had quite a bit of equity in there. I was able to get a second mortgage, take $80,000, and I used that as a down payment on a $290,000 house in Windsor that I bought.
So your initial investment helped you buy two properties, because you really didn't have to do use any of your savings to buy the second property.
Exactly. And the second property is also cash flowing. So I can just let it sit there. The bills pay for itself. And yeah, this property, I've had the same tenant in since 2016, which is, from one side I could be charging significantly higher rent, but at the same time it's been really stable and he's a good guy that looks after the property. So yeah, it's been pretty great.
So
And yeah,
oh,
go ahead.
sorry, finish your sentence.
Yeah, that's the end of the sentence. Go
You
ahead.
essentially bought two properties in 2014. You used that same property to buy that one.
Right.
Like
the
whole
second
thing, you wish you bought two. You actually almost did.
Yeah, pretty much. And like, I want to compare it to something because, I do know people that invest in stocks and crypto and other things, and there is a way to make money in that. But, if I took that same 56,000 and I invested it in the stock market 7 years ago with 10% annual return. So let's say I invested in a fund that tracks the S&P 500, like nothing aggressive here, because, the aggressive plays that, I mean, I don't know if anybody that's watching this was involved in like investing in like cannabis stocks a few years ago, where just the prices was going up and down like crazy, like doubling, tripling in value almost overnight. But let's say something very conservative, so 10%. You take it's a little bit more than what the annual appreciation of real estate is, except for the last few years in Toronto. But if I took that same 56,000, I put it in the stock market 10 years ago, today I'd have let's say $110,000.
You would have just doubled your money, a little more.
I would have doubled my money a little bit more, but here I took 56,000 and I doubled my properties.
You own two properties.
Yeah, through that initial purchase.
Well done.
Thank you. So that's the power of investing in real estate, and a very real example.
That's
Carmelo,
a good example.
Do you want to talk about your example, Carmelo?
I'm going to share my story now, because I actually bought during the pandemic at the beginning. You can see I bought in June 28th, 2020. We had a lockdown, I think it was in March.
Mm-hmm.
And one thing when I bought my investment property, I took a different approach. I decided to buy with two other people, because I didn't want to, at that time, it was very scary because we just came out of like lockdown and we didn't know what's going to happen, but I did know that investing in real estate was a long-term play. So I actually, bought the property with two people, which a lot of people don't do, right? If I wanted to do it on my own, I most likely wouldn't have done it. So I bought a property in Barrie with two other people, and I kind of break down some of the numbers. I bought the property. Alex, you want to go to the next screen?
Oh, sorry.
All right. I bought a duplex. It was in Barrie. We bought it to my friends and their friends for $565,000. The advantage of me buying with two other people was splitting the cost. We put 20% down payment, $113,000. Closing costs, which was the legal fees plus land transfer tax, added up to $10,276. So total cost, the total money we took out of our savings, the three of us, was $123,000. Now I'm not really risk adverse, but again, I knew the advantage of buying with other people. Especially at that time, it only cost me $41,000 to invest in this. So I reduced the risk by splitting it with two trusted friends. At the same time, I also reduced the workload. I live in Mississauga, properties in Barrie. Going up there, any work that's involved, now we share the duties with the rental property. I share them with two other people. So it makes it a lot easier when we have to renovate it. There's three of us going up there to renovate it versus calling a friend that may or may not come. We all have something to gain from it, which is very nice.
Mm-hmm. Next.
Now, yeah. One thing that happened is, so when we bought it, we got a mortgage for $452,000. Our payments came out to $1726 a month. Property taxes, $300 per month. Property insurance, utilities. We knew the monthly cost for this property was, let's call it $2,500 a month. Now the property, the duplex we bought, we had tenants inside. The upper unit rented for $1,850. The lower unit rented for $1,400. So we knew we're going to get $3,250 a month in rental income. We knew from the get-go there's going to be a surplus of around $740 per month, which really comes out to, like, let's call it just under 9,000 a year. So when we bought this, we knew this would be a good opportunity, even at the time when there was a lot of fear of people buying real estate, just like we have right now. With that, we kind of did the math, and we knew we were going to get around just under 9,000 in profit a year. We knew our initial investment was going to cost us 123,000. We just divided those two numbers. We knew if these numbers stay the same, we're going to get 7.2% return on investment, which is not too shabby.
Nice.
Now, the one thing that happened that was, that we didn't expect was the appreciation. We knew we still have a plan. Our plan is we were going to own this property for a minimum 10 years. And we thought, it'll take a few years, but in less than a year, the property value increased. So in March, we noticed in March 2021, values have increased significantly, and we got together and we said, okay, guys, we know the values are up. Let's start, let's take advantage of the equity that's in the property. So what we decided to do is we decided to refinance that mortgage, right? So we were able to refinance it, get a new mortgage for $560,000. Subtracted the previous mortgage. We had to pay a penalty to refinance it, just $2,800, which you think, oh no, I don't want to pay any penalties. We were very happy to pay that penalty because once
$900 a person.
Yeah, once we pay all those costs, there was an extra $112,000 for the three of us. We divided it by 3. We all got $37,000 each. We put in $41,000 to this property. We got $37,000 back in a year. Now the property is paying. We're using the bank's money to own this property. I had to refinance my home. My friends had to take equity out of their homes. We all had to do something we really don't want to do because they're principal residents. We did it. We didn't expect it to happen within a year, but within a year, we actually got pretty much all our money back.
Nice.
And that's the advantage. Like if I would have went on it if I want to do it on my own, I most likely never would have done it. So the one thing, if you're looking at buying properties, again, you don't have to bear the burden on your own.
Yeah. There was a person that I was speaking to, like he bought a property with 4 of his friends, which is still, like it's about getting into the market, right? Like I think that, it's
that's
smart,
how you have to be creative when it comes to getting in.
Yeah. I mean, you have to make sure that you're doing this with people that you trust, but also you want to make sure that you have everything in writing and you're using the right type of paperwork to kind of set out the terms of this joint venture, right? But as long as everybody's on the same page and in writing, it's I think it's a great opportunity. Like I bought JV ventures as well, exactly, and it was like the difference between not getting in or getting in, or like one person gets the mortgage, the other one fronts the down payment. Like there's ways to kind of make it work.
So Sandeep actually asked the question earlier with regards to, can a person start with a low amount? Yeah. I hope my example kind of shows you don't need $120,000 to buy property.
Yeah.
What you do with a friend or a family member is finding that that agreement, and that you have to have that same mindset, right? Yeah. Because teamwork makes the dream work. It's so true. It's harder with prices where they are. It's, putting 20% down. Listen, if you can do it on your own, that's great. But if you want to share the risk and share the responsibility, so there's a lot of work with owning a rental property. You could definitely put put less money of your money down and still get a great return. Yeah. Because in 25 years, Alex, myself, we're gonna have properties that someone else is paying for. The balance would then be 0, and we could do a lot of things. You could do a lot of things when you have someone else paying off your mortgage.
Yeah, or look for a market where you can still attract those high caliber tenants, and the property values or costs are not as high as they are in the Greater Toronto area. For example, in Alberta, like in Calgary, right? Like it's yeah. So there's some good opportunities there, and it's in Canada there's only so many of these markets, and that there's so much potential for growth there, because it's basically, I don't know, when I look at Calgary, I see Toronto like 10-15 years ago. That's what I see. So, like I think in the States, people are a lot more open to investing in places that they can't drive to. But in Canada, I have encountered this a lot where, people are waiting to, get into something in their backyard. And what ends up happening is that they, just wait and don't do anything. So, it's like take some action, to do some steps. If you want to get into property ownerships and you can't afford anything in the Greater Toronto area, there's some other markets available to you as well. It's, like you don't have to move there. There's property management companies you can hire. The properties that I sell come with free property management and a rental guarantee. So, there's ways to get it done. Yeah. So yeah, I guess that's our presentation. So we can open it up to some questions. What do you need to pass the stress test now? Okay, so SA wants to know, what do you need to pass a stress test nowadays? Some people work and live to just pay their expenses. What tips do you have for people to gather 20% and pass the stress test? Also, what if you went to a private lender for a mortgage loans? Do you advise this or stick with banks whenever possible? Can I answer the first point?
Sure.
We're doing a webinar in 2 weeks about how to save for a down payment. So we do encourage you to join that SA if you want to learn a little bit about that. I mean, that webinar is not as much real estate focused as it is just focused around building good financial habits. So I hope you can join us for that. My understanding is private money is always more expensive than banks, but I don't know, Carmelo, do you want to share your thoughts on this?
So yeah, there's 3 types of lenders I like to break it down to. Then I'll kind of simplify to what the terms that a lot of people hear of. It's the A lenders, the B lenders, and the private lenders. There's a misconception. There's no such thing as a B lender. A lot of these quote unquote B lenders are actually tier 1 registered banks. They're just lending guidelines are different. So private lenders are just individuals or a group of individuals that put their money together. When it comes to the stress test, the beauty for you is you have nothing to do to stress over. As a mortgage broker, I go through all the stress. How do I have you approved, get you approved through the stress test? So the stress test, nothing you could do and you could handle. What the stress test is it's kind of like a what if scenario. What if interest rates are 2% higher than what they are? So if you're getting a mortgage today, whatever the rate the bank's offering you, you have to show that you can afford that same mortgage if that interest rate was 2% higher. When it comes to buying investment properties, if you're buying with a private lender, may not be a great solution, because how would you get out of it? If you can't get into it with a private, if you get into the market with a private lender and not with a bank, how do you plan on getting out?
Yeah.
So I don't really recommend, if you're buying your first, second, third property through a private lender, you may want to look at other options or different properties, better yet.
Yeah, I mean, I do see, people out there that, use the term other people's money. And I guess in situations like that, they're just like a lot of leveraging, where they're taking and getting the deposit from a private lender and paying like 20% on that money. And then they get another mortgage, but that's covering this. And then, that's happening. And then they maybe they do some forced appreciation on the property and they renovate it. And then they're now able to refinance it and they're paying off this party. And like, it's a lot of moving pieces. It's especially for somebody who's just kind of like looking to get into real estate investing, doing something like that. It's, it may not be the right fit. You kind of want to like walk before you run or get into like any risky situations like this. What if I cannot get a mortgage approval for a pre-construction without an assignment clause in the contract? So Hassan, in that case, you may lose your deposit and you may also get sued by the builder. So you want to, I don't know if this is an existing property or not, but you want to make sure that you have an assignment clause, and an assignment clause can also be negotiated into the contract. Like the builder may say there's no assignment clauses, but if you're working with a realtor to buy pre-construction, you can negotiate that in. And, I know for the properties that I do out in Calgary, there's free assignment. I think that it's actually potentially illegal in Alberta. I don't want to. I'm not sure, but I think it's illegal in Alberta to not allow assignment of a property. So yeah, Hassan, that's what happens. I recommend speaking to a lawyer if that's a situation anybody on this is encountering.
Or one thing you could do is also as a solution is maybe look at buying the property, adding someone else you're buying the property with,
Mm-hmm.
to help you get qualified.
That's a great recommendation there as well.
If
Yeah.
you need help with that, that's something I've seen that happen. I can help you with that. Just let me know.
Yeah.
That's what a lot of people do, Alex. Like, and everyone here, like buying on their own, it's definitely getting harder. So if you're in that tight situation, ask for help.
Yeah. Or if you're buying an investment, like why do you need to own 100% of that? It's better to own a third of an investment property than to own none of one. In at least in my opinion. I have a bias, and obviously we're doing this webinar, but
I have a bias too because I actually did that, Alex.
Yeah, that's what I mean. Like, I mean, your point was great. It's like it's either like coming up with 120K or getting 40K of equity and using that, and then you were able to refinance and get your money back. I mean, you essentially bought that property for like $2,000 each.
Yeah, I came with the 4, but yeah, like our intentions were after 5 years taking equity out and so on and so forth, but the market went up a lot faster than we expected. It's like we took advantage right away, and although we had to pay a penalty, I hear a lot. I don't want to pay penalties. You got to put things in different perspective. What it cost us to what we got back in return made perfect sense.
For sure. Is there any other questions? Okay, so Jeffrey has a question. How do you find cash flowing properties that you can realistically take care of if you live in downtown Toronto, assuming you don't want to invest out of province? So if you want to take care of it yourself, as in self-manage and be able to get there, you're looking at properties that are multi-unit properties. So, like maybe a duplex or a triplex. There are markets like Hamilton. There are parts of Durham region, places like, Bear. Go ahead.
What about Brampton? But I think Brampton's legal duplexes. Properties that have like a separate entrance for a basement are legal now. Everyone's got to be registered with the city, do they not?
I don't know about that, but I mean, I do see a lot of properties that are being sold and people that rent out their basements, and like you don't even know if this is a legal basement or not, or they even put in their schedule like the landlord does not warrant that the basement retrofit is legal. Now in Toronto, you can build a laneway house as well, right? So laneway houses are something that people do, where they, maybe buy a duplex and then they buy something with a lot where you can then put the laneway house on the lot. You're essentially creating a third unit. So, I mean, Jeffrey, it really depends on, I guess, also what what the person is working with as far as the capital and how much they're looking to get, because there are great opportunities to find cash flowing properties even in the GTA, but it really depends on how much the person is looking to put in.
Can I add one more thing to answer your question, Jeffrey? If you want to buy a property in Ontario, not out of province, let's call it in Ontario, go ahead and buy a property outside Toronto, hire property management. Property management still goes through you to make a lot of decisions. Is that right, Alex?
I mean, you have to kind of dictate the terms on that. Like you kind of tell them like how hands-on you want to be. Yeah,
like you don't have to, if somebody needs to, if it's small things, you can leave it to property management to handle it. And any of the big things you can still do on your own.
Yeah, you can say like if it's up to $500, I don't want to know about it. You just deal with it. But you can say if it's up to $50, like whatever, it's whatever you're comfortable with.
So that's an opportunity to where you can buy property a little bit. If you're buying in downtown Toronto, maybe a little bit more challenging. But if you went a little bit further out, Mississauga, Brampton, Oshawa, Hamilton, like again, you'll definitely find a lot more properties that are cash flow positive.
Brantford, like not Bradford, but Brantford.
There's a lot of communities that let's call them the Greater Toronto area, or where you can find properties that actually are cash flow positive.
Keswick.
So we have, Jamil has the question. What advice do you have for where to invest and what property type to invest? Are there any advantages in investing in a multiplex over single family? So let's share both of our opinions. Alex, you can go first.
Well, I think one thing is, we were talking about this before, is like in the multiplex, you have, let's say you have a triplex, you have 3 people that are paying, one moves out, you still have 2 that are paying. And you also can kind of do renovations and, kind of appreciate that property more. So I think that multifamily is like, the only challenge is like when you're going to go to resell. Like I feel like multifamily is not going to appreciate at the same rent at the same rate as single family, just because the market for multifamily is not the same. And then if you're going to be, selling your triplex or your fourplex, like you're going to be looking for other investors to buy that. Like it's not going to be the same market of buyers. What do you think about that, Carmelo?
So again, I think very good. Along the same lines. What are you looking for? Are you looking for cash flow or looking for appreciation? You're going to get a little more cash flow on a multifamily property, but you won't get the same appreciation because there's going to be tenants in there. There's going to be a lot more wear and tear. The tenants are going to be. It's not going to be a revolving door, but it's going to revolve a little bit faster than a single family dwelling.
Yeah.
It's a single family dwelling. You're going to get a lot more appreciation. That's what's in demand. When you want to sell it, people are looking for single family dwelling homes.
Yeah, and think about, like, you have 3 kitchens, so there's 3 fridges or stoves to need to be repaired, and maybe the tenants upstairs are making noise, and the tenant in the basement's working some different shift and can't sleep, and all these things, like somebody parked in somebody else's way. So it's like it's a little bit more hands-on, but as long as you put processes in place to deal with these things, it's definitely something that I think is like a really good opportunity. But you just have to make sure that you're process driven. You're not reactive. You're kind of sitting down and mapping out, just kind of setting out the guidelines and making sure everybody's on the same page. And then it can be great. But it's a little bit more hands on. That's for sure. Like single family home, like for example, this example in Barrie, like I never hear from this person. He just pays his rent and that's it. And then like every 6 months I go there and I kind of just pop in and that's it. So like it's yeah.
You got to define your goals. What are you looking for? Appreciation, cash flow. Once you kind of determine that, there's no such thing as the best one. Hindsight's always 20/20. Either one you buy, it's an opportunity.
As far as platforms to connect with people that are looking to JV with you, I mean, there's different Facebook groups that you can join. You can just, search, probably even just like real estate.
I would actually be looking at your own network. If you're looking at properties, look in your own network of trusted people, because again, friends, more importantly, family, get them involved. Everyone benefits from it, right?
Yeah.
So that's the best. That's the best place. Just go within your network, and you'll be surprised. It could even be a work colleague. If you've been working at the same place for a long time, you know people for a long time. It's go within your own network.
Yep.
So we had a lot of good questions tonight.
Yeah, very good.
One thing
Stop the recording.
Okay, give me a second.